E-mini S&Ps end the week on a down note, actually the lowest Friday close we've seen since the end of July, so it's been quite a while. Certainly, equities have outperformed just about every other asset class coming into the month of September, but historically we do know September is not the best month. It's actually the worst performing month for equities, and after making a new all-time high on September 3rd, it has been a direct 180. We've seen stocks head lower. Much of that coming after the weaker jobs report, lower inflation, now concerns over what the Fed may or may not do at FOMC next week, and it looks like equities right now kind of regrouping, waiting for the dust to settle after next week's FOMC meeting. We'll talk about that in a moment, but certainly well off those all-time highs nearing 4,400 in the E-mini S&P. Now, what does this mean for volatility? Well, the VIX index closed above 20, a significant level. It did it last Friday, too, ahead of the inflation data that we had. So we have seen elevated volatility in the equity markets, despite the fact that we continue to see them move higher. Obviously, since the turn that we talked about on September 3rd, things have shifted a bit, and it's a very directional move. As equities go lower, volatility goes higher. Thing is, we haven't seen a whole lot of sustained trade of lower equities, so volatility has been relatively low, but now we're starting to see things perk up. Not only is it the directionality of the underlying indexes, but it's also the event risk that we're going to be seeing. Clearly, FOMC, the biggest on the calendar this month. And let's talk about FOMC. What can the Fed do, and how will it affect stocks? The Fed right now, given the fact that they didn't use the opportunity given to them at the Jackson Hole Symposium at the end of August to announce some kind of tapering plan, or at least alert the market to what they might be doing, most analysts believe that this is going to be the case next week at FOMC. They're going to talk about tapering. What does that mean for stocks? Well, it's the beginning of the shift in policy back to a more normal policy, if we can even say that. At this point, we're still going to see rates at zero. There's no expectation that the Fed is going to be raising rates anytime for the next couple of years, but maybe taking back some of those asset purchases is step one. Equities clearly like a zero interest rate environment. It feeds into equities as there's no other alternative, given the fact that rates are at zero. So at this point, equities may look to come off a little bit if the Fed is aggressive in their taper talk. But if there is no taper talk and they don't really give us a clear date on when they will begin to taper their asset purchases, that would likely push stocks higher. Obviously, we have to wait and see what happens next week. The Fed chair will be speaking after this meeting. We will be getting forward guidance from the Fed, so a couple of things to keep in mind. But clearly, this is the event on the calendar that the markets have been waiting for. And this week's pullback, nothing that really reflects the greater economy, more so than maybe just taking risk off the table ahead of such a big event. So E-mini S&Ps closing at their lowest level on a Friday since the end of July, ahead of next week's FOMC and Fed Chair Powell's testimony, which will follow immediately after.